Hello everyone, welcome to the Bodhi Academy. Today we'll start with chapter 5 of standard 12 PYQ solution and the chapter is accounting for shares. Okay, so we'll start with the first question. The first question is Akasa Limited forfeited 1800 equity shares of rupees 100 each, issued at a premium of rupees 30 per share for non-payment of allotment money of rupees 65 per share. Now here it is including premium. Okay, so we'll solve the first part. Whenever there is a forfeiture, we pass basically a 3 entries. So here they have told that they have forfeited 1800 equity shares. So forfeited means they have cancelled the shares uh, of rupees 100 each. Now these shares were issued at a premium of rupees 30. So these shares were issued at premium means something extra, additional per share for non-payment of allotment money of rupees 65 per share. Now this was including premium. Then the next part what they have given is the first and final call of rupees 40 per share has not been made yet. So the first and final call is not been made yet. Okay. So these shares, so we have to show only the allotment entries because they have not made first and final call yet. Okay. It is given in the question. Then again, whatever the shares were forfeited, now here they have mentioned that 1800 equity shares were forfeited. So whatever these shares were forfeited, now these shares were reissued at rupees 80 per share as fully paid up. Pass the necessary journal entries in the books of Akasa Limited. So we'll pass the entries. So whenever you are writing, you have to write down the first heading, journal entries in the books of Akasa Limited, and you have to write down serial numbers, particulars, LF, debit and credit. Then first entry, whenever there is a forfeiture entry, you have to pass it with this account, equity share capital. Now in this question, they have mentioned that forfeiture, they have forfeited 1800 equity shares of rupees 100 each. So equity share capital account 1800 multiplied by 100. You'll get this. Then next, they have told us that they were issued at a premium of rupees 30 per share. So the second part, what I'm getting is securities premium reserve account because they have issued this at premium. So that's why this premium entry came over here. Okay, if premium entry, if premium they have not told, then this entry will not have come. Okay, directly the call scenarios and share forfeiture account will have come. So here you have to pass since the premium entry is given in the question, you have to pass the premium journal entry. So securities premium reserve account 1800 shares were forfeited, multiplied by 30, you will get this 54,000. Then since there is a non-payment of allotment money, non-payment, that's why here calls in areas come. Basically calls in areas come because of non-payment of money. So here how much is calls in areas are for? It is for 65. So what I am doing is 1800 multiplied by 65, you will get 1,17,000. Okay. Then after that you have to pass the share forfeiture account. Share forfeiture account is you have to remember that it is always the balancing figure. Okay, so this 45,000 I am getting. You have to add both the debit entries. So these are the debit entries you have to add and minus it with 1,17,000. 45,000 is the balancing figure what you will get over here. Okay, so this is the balancing figure, share forfeiture. The narration. The next part is you have to always write down the narration. Being share forfeited for non-payment of allotment money. Okay, since they have not paid allotment money, the 1800 shares were forfeited. It means it was cancelled. Then next entry what I am going to pass is, now here they have told us that for the second part they have told us that these shares were reissued at rupees 80 per share as fully paid up. So here the next account, now since they are reissuing it to the next investor, that particular investor is depositing that money will go into their bank account, right? So you have to write down bank account debit 1800 forfeited share multiplied by 80. 80 why? Because now they are reissuing it for rupees 80 per share. Okay, next entry what will come is this of share forfeiture account, how much for the shares were forfeited, and then the equity share capital account. Okay, so always this share forfeiture, I told that this is your balancing figure. This you have to remember. So you have to minus 1,44,000 minus 1,80,000. You will get 36,000. Okay. Then, now the very important part what you have to check with regards to the forfeiture entry is you have to check whether the surplus amount is remaining or not. Now since here you have to, for that you have to check share forfeiture account. So here share forfeiture account, and see, one part it is getting credited, the other part share forfeiture is debited. So one side it is credit and debit. So you have to minus, okay, and you have to check whether the surplus amount is remaining or not. Now here surplus amount is remaining because here on the credit side for the first entry, surplus how much is the amount? 45,000, okay, and then for the next part it is 36,000. So you have to minus both the side, credit and debit. So 45,000 minus how much is that? 36,000. Okay, so you will get 9,000. So 9,000 here is the surplus amount. Okay, now this surplus amount you have to transfer it to capital reserve account. So whatever the surplus amount is remaining, that only you have to transfer it to the next account, that is capital reserve account. Okay, but whenever you are passing the entry, you have to pass that share forfeiture account debit to capital reserve account. Okay, and the balancing and the remaining amount, the surplus amount is 9,000 as shown over there. So then next you have to write down the narration. Being profit on reissue transferred to capital reserve account. Okay, so this is what the first journal entries in the books of Akasa Limited. So we'll start with the second question, that is Soham Company Limited purchased a machinery from Manoj Company for rupees 16 lakhs. Okay, then a sum of rupees 60,000 was paid by check, and for the balance due, Soham Company Limited issued equity shares of rupees 100 each at premium of 10%. Pass the necessary journal entries in the books of Soham Company Limited. So now here you have to write down the first thing, that journal entries in the books of Soham Company Limited. Then the first part you have to focus on. Now here for the first part they have told us that Soham Company Limited purchased the machinery from Manoj Company. So the first journal entry will come machinery account debit. Since machinery is a asset, it is a real account, or debit what comes in, so that's why machinery account we have debited over here. Okay, so here the machinery account you have to debit to Manoj Company account, okay, Company Limited, because you have whatever, whoever is vendor, you have to credit it, and narration you have to pass that being machinery purchased from Manoj Company Limited. Okay, so this is the first part. So they have purchased machinery for 16 lakhs. So 16 lakhs you have to write down for both entries, debit and credit entries. Next part, since he has purchased is for 16 lakhs, but he has only done the part payment. So I done the part payment of rupees 60,000 only. So whenever you are writing, that particular amount is going into the bank account of Manoj. So Manoj is receiving it, right? So Manoj Company account debit 60,000 to bank account, and the narration you have to write down is being part payment done to Manoj Company Limited. Okay, but the next part, now how much is left? He had paid out of the machinery is worth of 16 lakhs, but out of 16 lakhs he had only paid 60,000. Okay, so how much is remaining? Remaining is 1,54,000. Okay, so this is the balancing figure what we are getting. So 16 lakhs minus 60,000, you will get this amount. But now the further information what they have given is for the balance due. Now this is the balance which is due, okay, which is yet to be paid. So Soham Company, what they did is they issued equity shares of rupees 100 each at premium of rupees 10%. Okay, so whatever the balance is due, they have issued equity shares of rupees 100 each. Okay, so whenever the situation is like this, you have to find out the purchase consideration. Okay, so for purchase consideration, you have to take whatever the balance is remaining. Now here the balance which is remaining is 1,54,000. So what you have to do is, so this is the part payment, okay, part payment divided by the issue price. And how you are going to find out the issue price? Issue price is nothing but it's just a combination of the face value plus premium. Okay, so we have the balance due amount payable. So this we can say it as this is the amount payable. Amount payable divided by the issue price. Now issue price we know how much is the face value. Face value is 100 and premium is given in the sum as 10. So 100 plus 10 which is 110. So if you divide this both 1,54,000 plus 110 you will get 14,000. 14,000. So the one share is worth of 14,000. So this you have to do whenever you are passing the third entry. So for the third entry you have to write down Manoj company account debit. Now you are paying the due amount to Manoj. Okay, to how you are paying, but we have issued equity share capital here, right? So equity share capital account. So equity share capital, how much? One is we got of 14,000, right? So 14,000 multiplied by 100, you will get this 14 lakhs. Okay. Then with regards to security premium, how he is issuing? He is issuing 14,000 multiplied by 10. Since the security premium is of rupees 10. Okay. So you'll get 1,40,000. Then narration you have to pass the next entry, you have to pass the narration being issue of 14,000 equity shares of rupees 100 each at a premium of 10% to Mohan in full settlement. So for the third entry you have to show how he had paid the remaining amount. But for this you have to find out the purchase consideration and this you have to find out. This is very important. This part you have to find out. So the third question is Kapil Trader issued 5,000 equity shares of rupees 100 each at a premium of 545 payable as follows. So on application they have given as 50. So out of 100 shares they have given on application 50 and on allotment 595. Now this is including premium they have given. Allotment was made to all the applicants. Pass the necessary journal entries. So this is the question. The first thing you have to write down journal entries in the books of Kapil Traders. Then next serial numbers, particulars, LF, debit and credit. Now the first entry what they have given is on application. So on application they have given 50. Okay, so how you are going to write down whenever there is application is like a registration. So whenever you are doing that, the first amount it will go into the bank account of this Kapil Traders Limited. So bank account debit to equity share application account. Now investor is taking the equity shares. Okay, they are doing the registration. So bank account to equity share application account and the narration what you have to pass is being application money received on 5,000 equity shares. Now here in this question they have given 5,000 equity shares of rupees 50 per share. Okay, so what I'm going to do 5,000 into 50. So 2,50,000. On application it is 50. On application they have given as 50. So what we'll do 5,000 into 50. So 2,50,000 on both the side. Then the next entry what you have to pass is you have to show that whatever this amount 2,50,000 you have to show that it is being transferred to the share capital account. This account. Okay. So the second entry now since here you have credited. Now here we have credited this entry. Okay. So the next step we are going to debit it. So for the first time if you are going to credit, then the second time when you are going to pass this entry you have to debit it. Okay, so here we have debited this equity share application account debit to equity share capital account. Now why we are transferring it to this account is here only the money is in the bank, so you have to you have to keep that money into the separate account. So we are keeping it into this account to equity share capital account. Okay, so here the narration we are going to pass is being application money transferred to share capital account. Okay, so these two entries with regards to application. Then so for application we usually pass these two entries for the starting. Then the second one is on allotment. So for allotment they have given as rupees 595, but now this is including premium. Okay, and allotment was made to all the applicants they have given. So whenever we are going to pass the allotment entry, it's same like how we have passed it for the second entry, equity share application account. But instead of application here, the name will come as allotment. Okay, equity share allotment account debit, like this it will come. To equity share capital account. Why capital account? Because this amount we have transferred into this account, right? So that's why this name will come. So as of now, we only know that in equity share capital we have 2,50,000, which we know that we have 5,000 into 50 from application, so 2,50,000 from this, and then we can also get the answer for the securities premium. Now here, why this securities premium came? Because it is given in the question that allotment is including premium, so that's why you have to pass this. But premium is of how much? Premium they have given at, it is of 545 each. So premium is 545, so that's why we did 5,000 multiplied by 545 here. So we got this answer to 2 lakh 72 27 lakhs 25,000. Okay, so these two things you have to add it together to get the total amount of equity share allotment account. Okay, so if you add this total, you will get 29 lakh 75,000. Okay, so this is how you have to pass the journal entries in the books of Kapil Traders. So the fourth question is, journalize the following transactions in the books of National Company Limited. A first entry, a final call was made by the company of rupees 3 per share on 50,000 equity shares. Second, the entire amount was received by the company except from Mr. Vijay holding 150 equity shares of rupees 10 each. Then, third, the company duly forfeited the shares held by Mr. Vijay. So we'll pass the entries. First, you have to write down journal entries in the books of National Company Limited. Next, now whenever you are passing the first entry, you have to go step by step. So here they have given a part. A final call was made by company of rupees 3 per share of rupees 50,000 equity shares. So equity directly they have moved to the final call account. So directly we are going to take equity share final call account debit to equity share capital account, because whenever we pass this entry, we directly put it into this account. Okay, equity share capital account. And the narration what you have to pass is, being final call money due on 50,000 equity shares of rupees 3 each. So how you are going to do? 50,000 is the shares, equity shares what they have given, multiplied by 3, you will get 1,50,000. Okay, so this is with regards to the first entry. Second entry, what they have given is, the entire amount was received by the company except Mr. Vijay holding 150 equity shares of rupees 10 each. Now Mr. Vijay was holding 150 equity shares. So what you are going to do? Now here call scenarios came because he didn't pay that amount 150. So bank account debit, call scenarios account debit. We know that in call scenarios it is 150 amount which he has not paid. So 150 multiplied by 3, you will get 450. Okay, and here we know that in our equity share final call amount call account we have 1,50,000. So 1,50,000 minus 4,50,000, you have to you'll get this, you have to minus. So you'll get the actual amount how much is remaining with the Bank of National Company Limited. Okay, so since he didn't paid 150 rupees, you have to multiply it by 3. Okay, because here it is for 3 per share. No, so then next for the third entry and the narration you have to pass, being final call money received. Third, what they have told us that the company duly forfeited the shares which was held by Mr. Vijay. So they forfeited the shares, they cancelled. So what you have to do is equity share capital account. So 150 shares of rupees 10 each of Vijay. So 150 into 10, you will get 1,500. Now since they forfeited it, okay, so you have to pass the forfeiture entry, and you have to remember that forfeiture entry is always the balancing figure. Okay, so we know that how much is there in call scenarios account. So call scenarios we have 450. So whatever the amount is there as it is, you have to take 450 over here, and in equity share capital, it's of 10 each, so 150 into 10, 1500. So 1500 minus 450, you will get 1050. So this is the balancing figure what you are getting of share forfeiture account. Then narration you have to pass. Being forfeiture of 150 equity shares of rupees 10 each for non-payment of final call of rupees 3 per each. Okay, so this is how you have to pass the journal entries in the books of National Company Limited. Whenever they give direct entries like equity share final call account, you have to pass the entries directly. Okay, and whenever non-payment will come, you have to pass the cost in arrears entries. Fifth question is, Hazel Limited invited application for 3000 equity shares of rupees 100 each. The amount payable on application was rupees 25 per share. This issue was fully subscribed and shares were duly allotted. Past journal entries for the above transaction. So first thing, you have to write down journal entries in the books of Hazel Limited. The next, now here in this question they have invited applications for how much? They have invited applications for 3000 equity shares, okay, of rupees 100 each, and the amount payable on application was rupees 25. So first we pass it on application. So whenever we pass it on application, the first entry is the same, bank account debit to equity share application account, okay. Then next you have to write down the narration. Being application money received on 3000 equity shares of rupees 25 per share. So 3000 multiplied by 25, you will get this 75,000. 3000 multiplied by 25, you will get 75,000. Then next, now whenever they have mentioned here that this issue was fully subscribed, and the amount payable on application, we know that it is already 25, and this issue was fully subscribed and shares were duly allotted. So all these things were fully subscribed, so that's why this second entry will come. Now here we have credited this entry, equity share application. Now since we have credited, for the next entry we have to debit. So whatever is getting credited, for the next time it is getting debited, okay. So equity share application account debit. Now this amount, 75,000, we are, since it was in bank account of this particular Hazel Limited company, now we are transferring this amount into the share capital account, okay. So that's why this entry you have to pass, equity share capital account. So whenever you are transferring this, here you have to pass the narration. Being application money on 3000 equity shares of rupees 25 per share, this is transferred to equity share capital account, okay. And the amount you have to write down 75, as they have not mentioned anything more extra information. They have only told that whatever is being applications are done, that much only they have subscribed and shares were duly allotted. So this is how you have to pass the journal entries with regards to Hazel Company Limited. So now let's move to the MCQ, and the first MCQ is, when can a company demand for the premium amount if the shares are issued at price higher than their face value? So the options given here are at the application of shares, at the allotment of shares, at the calls on share, or at any stage of the issue of shares. So the correct option is at the any stage of the issue of shares. Okay. Now next MCQ, that part of the capital which is the uncalled capital of the company and can be called up only in the event of winding up of the company. Here the options given are capital reserve, nominal reserve, issued capital, or reserve capital. So the correct option is reserved capital. Next MCQ, which one of the following is the registered capital of the company? So the registered capital of the company is obviously a authorized capital. Here options given are paid up capital, uncalled capital, issued capital, or authorized capital. So the correct option is authorized capital. Next, an issue of shares that is not a public issue but has been offered to a selected group of person is called, and the options given are public offer, private placement of shares, initial public offer, none of the above. So the correct option is private placement of shares. Last MCQ, Which of the following statement is incorrect about preference shares? Now, with regards to preference shares, here preference shares are those that can be easily converted. They may be redeemable, or and they have the voting rights in case of special situation. Here, the incorrect option is they have the right to flexible dividend. This is the incorrect option. Thank you for watching the video. Do like, share, and subscribe.